All right, welcome to the next weekly outlook, everyone. So as always, we're going to go through the fundamental analysis first and then go ahead and move on to the technical side with Stefanos.
What's going on, guys? Hope everyone had a great weekend. Let's get into the charts so you guys have a good idea what to expect for the week.
Absolutely. So again, just from a macroeconomic perspective, still the major fundamentals that a lot of investors are looking at is the Russia and Ukraine and everything that's surrounding it. So it started off with just, talks about threats about invading to actually invasions happening, to shelling nuclear plants last week, and then having talks as well. And while talks are going on, still there's like invasion happening in the background. And then on top of that, you also had a lot of countries stepping in, kind of in support with Ukraine, not in the sense of like a military support or sending their military out, but more from economic perspective where they were placing sanctions on Russia. So obviously Russia is going to go ahead and respond to that. And so that's what we're seeing this weekend and going into this new week. So we're starting to see Russia's response to a lot of the sanctions that are being put onto Russia from the US, from the UK, from a lot of other countries, especially Europe as well. So Russia supplies about 45% of Europe's gas and energy. So now they're coming back and they're threatening to cut the gas flows to Europe via the Nord Stream 1 pipeline. So essentially what that's going to do is, push up the gas and energy prices, as we have been seeing it in the past couple of weeks with commodities in general, with gold, with gas, and oil. But this is just going to go ahead and support that entire push up that we have been seeing, because 45%, it's a little less than 50, but it's still a significant amount. So if you cut off 45% of the supply to any country, then that country needs to find another alternative to kind of make up for whatever they're losing out on. And that's true of the United States as well, right? So the United States is also, as we're going to move on, they've been talking about this new bill to essentially ban Russian crude oil imports into the United States. So same thing there, where if you're going to ban the Russian crude oil imports into the United States, then how do you make up for that small percentage? So Russian oil makes up about 3% of US crude oil imports. It's not a lot, right? But it's still significant enough to help hike up those gas prices that we have been seeing lately. So how do you make up for that? Obviously, at the moment, what we're starting to see is, a lot of clean energy, electric energy, and all of that starting to, boom into the markets and everything, but it's not adopted well enough to go ahead and have the capability to replace any sort of crude oil that we have been using in a lot of manufacturing or other parts of the economy. So now the discussion comes into play that, hey, are we going to continue releasing more oil from our emergency reserves, or are we going to talk to OPEC or some other cartels like that? Mostly it's OPEC, the cartel that kind of determines the supply of or production of oil globally. So is that something that we're going to have to look into? How do we pretty much manage this crisis? Because that clean energy, solar energy, all that stuff that we're looking into is just not ready enough to replace any sort of crude oil that we have been using so far. So because of that, we're starting to see increases in prices. And then you're also starting to see oil prices right here across markets tapping into historical highs, that prices, the levels that we haven't been tapping into for decades. And for, if you're looking at certain stocks or if you're looking at certain current commodities, anything like that, then these are levels that we have never seen before. Even with gold, we're going to go over this in the technical analysis, but we're coming back and tapping into levels that we haven't tapped into since the beginning of COVID, which has been 2 years now. So those are the macro fundamentals that a lot of investors, and that's what the market is looking at the moment. This is stuff that we still want to pay attention to. This kind of rolls right into the interest rates news that we're supposed to get this month. So on the 15th and 16th, it's going to be from the US, but then you also have interest rates from Europe coming out. You have interest rates from Bank of England coming out. So this is the type of information that's going to be important in that decision making as well. So if prices are increasing, what's the main tool that any central bank has to fight against this inflation? It's interest rates. So we're starting to get, employment data that's already coming out. We had, pretty good NFP data coming out. And then also now you have this news that's supporting inflation, which are the dual mandates of any central bank. So all of this is supporting to that interest rate hike, which the investors are starting to price in a little bit when it comes into the markets. And then moving on to the economic calendar side. So we started off quite easy on Sunday when the market opened up in Asian session. Today as well, not much coming out, right? Even in Asian sessions, there's the economy watchers sentiment, but other than that, there's nothing much coming out. And then even in London session, going into London session on Tuesday, it's all just a couple of Euro news, but other than that, pretty easy. It's going to be quite an easy session when it comes to any sort of economic data. And then finally, we're going to start to see things picking up in the US session on Wednesday when you have the JOLTS job openings. So we've already had a couple of employment data coming out last week, which is going to help set up for this JOLTS job openings that we are going to see coming out on Wednesday. After that, you have crude oil inventories. Obviously, we just talked about oil, we just talked about energy, gas, and all of that. So this should kind of help you guys get a better outlook of what to expect when it comes to crude oil inventories. And that's going to be important if you're trading US oil or if you're trading USD CAD. After that, quite an easy, quiet session, New York session, even Asian session. There's nothing coming out in pre-London. And then on Thursday, you have the Euro interest rates coming out. So this is when things are starting to pick up for this month, right? So this week you have the Euro interest rates coming out. And then the following week, you have the US interest rates coming out. And then you also have Bank of England interest rates coming out. So now things are starting to pick up a little bit. Expect the markets to consolidate, especially as we're tapping into some of the key areas, which we are going to go over in just a little bit. But expect the market to consolidate because it's getting ready for these high impact news that we have been waiting for. And again, the most important thing here is going to be the monetary policy statement, but also what do they end up saying in the press conference? Because the press will always ask some questions about what's the situation right now, what's their outlook, personal outlook, and then also questions about the future, different situations that we could end up seeing. How would the central bank react in that situation, which is going to be very important to know as well. And then you have CPI data coming out. So Thursday is going to be the day that you kind of want to trade if you're trading with fundamentals. And then pre-London data coming out, a lot of GBP news for Friday. So Friday's London session is going to be pretty good too, as the market's trying to price in all of this. And then after that, you have the consumer sentiment, inflation expectations. So that's pretty much an outlook for this week when it comes to economic data. So tomorrow, expect the markets to react to macro fundamentals, but there's not much coming out from economic data. But if you want to trade macro fundamentals plus economic data, you should start on Wednesday.
Heads up for you guys. I was just telling Trauma about this, but TradingView actually has a desktop version that you guys can download to your computer. So that's actually what this is right here. So it's not like Internet Explorer. This is just TradingView. So I would highly check it out. It's I like it. I literally just downloaded it. So so far I like it already. But moving into here, I have basically the skeleton broken down over here as far as that multi-year downtrend. We have our bullish trend from COVID over here, and then our two levels of 156 and 149 that we're kind of bouncing in between. So looking over here at the candles, again, for the fifth month in a row, we've actually rejected 156 on the monthly view, right? So multiple months over here, we've rejected. We created a new top wick over here on the monthly candle, flip bearish, past the low of the previous two wicks. Right over here, we get the clean move to the left, and it looks like we could be possibly heading down to 149 again with the global tensions with Russia and Ukraine. That's obviously going to keep growing fear in the market, especially with talks not going too well, as Trump was talking about, and just further tensions. It looks like other countries are sending more and more troops over to Poland and Germany and also all of these European countries. So this obviously is starting to scale up a little bit. So if we get into like a World War III, you could expect this to completely tank, kind of like what we did with COVID. So looking at the weekly over here, we have a few levels that we just broke through. We broke through 153, 300. This previous level over here, where are we? 153. Yeah, 153, 300. This over here, which were the previous candle body resistances over here to the left, where it looked like we were holding support over here and continuing up, but we were just creating a top wick. And then last Friday, we ended up flipping bearish, breaking through that level over here, closing bearish, strong bearish candle. This current weekly candle already created a top wick over here and passed the low of that candle. So could we just be retracing right over here to then completely continue bearish, mirroring the moves to the left all the way back down to 149? Or are we going to retrace over here after passing the low, retrace, flip bullish, come back up to this level to retest it, and then possibly continue down? To me, I think we're going to continue bearish after already creating that top wick and passing the low over here. So especially if you look at the lower time frames, which we'll get into now. Looking at the daily, now it gets a little interesting. Now after tapping into 151 flat, which oh my God, I'll mark off right now. Let me just it's been a long week already. It's only Monday. So anyway, looking at the candle anatomy, you have their previous daily candle creating that strong bearish candle with no bottom wick. I'm laughing right now. Excuse me, guys. Created that strong bearish candle, no bottom wick over here. This candle has no bottom wick either, right? So are we holding support right over here to continue to drive up, or are we just creating a top wick right over here to possibly continue down and mirror candles to the left, continuing all the way back down to this level, 150 flat, right? So multiple things could happen right over here, especially with this candle closing with no bottom wick.
I like this 151 level because as soon as price breaks below this, that bullish candle has flipped bearish, and that's further confirmation of continued sells.
Yeah. You're saying like you form that top wick, we flip bearish, we continue down?
Yeah, because right now, like if you look at it from that blue zone that you have marked off, coming all the way down, we've never come back up to retest that blue zone, right? We just kind of shot right through it last week, and then we just continued down to this 151 level. That's a massive sell-off that just happened.
Absolutely. And also looking at the previous 3 daily candles, the top wicks on these candles are kind of similar, right? Especially this one right here, and then this one right up here. So looking at the size of this candle right over here, it's kind of looking the same size as these wicks over here as well, right? So could we be forming that top wick, flipping bearish, and continuing right back down? I mean, fundamentally, there's no reason for us to be buying GJ right now. And technically, you know, you see in the lower time frames, we're just making lower lows, lower highs, and just continuing bearish. So right now we're just retracing. Maybe we're coming up to retest this level right over here, right? Hold a resistance, and then we continue right back down from there. Looking at the 4-hour. So the 4-hour, we kind of stalled out last week on Friday. If you guys remember, we tapped into 155 flat, right? Heavy rejection. We actually called this, where we ended up rejecting this level over here, breaking the nearest support, and then we ended up just tanking over here. Now, very similar to what we had right over here, kind of where, you know, sellers took profit, buyers took over a little bit. We ended up stalling, consolidating, and then we just continued the move from there right down to this level over here, where now we stalled out, ended up ranging a little bit, broke the range with this candle, created this top wick over here, flip bearish past the high of that candle right there, or past the low of that candle right there, ended up closing bearish. So if we just respect this level over here and just form this top wick on this candle and then just continue bearish, I could very well see that happening, right?
But here again, the market started consolidating after a massive sell-off. So I would expect to see continued consolidation until we see, you know, updates about, you know, the macro fundamentals, obviously, that the world is looking at, which could help with that continued sell or some sort of market open. I wouldn't do it in the middle of like some Asian session or something like that if there's no news coming out.
Exactly. 100%. So maybe we just kind of range until London and then we continue down from there.
Yep.
Looking at the 1 hour over here, now you're starting to get a little sense of where price may be going based on just the candles alone. So we had this previous support turned into a resistance. We create this low over here. Now, as you could see, these candles held support right down here around 151. Strong bullish candle, strong bullish candle. This one got a little bit weaker. This one passed the high right away. Now it's starting to flip bearish. So can we end up holding a resistance somewhere in here or somewhere over here, where then we start to continue down and drive down? Maybe you could catch that move during Asian to continue right back down to this support. But again, like Sharma said, maybe we don't have enough volume to push us through that support, right?
But that's not to say that you can't scalp if price continues pushing down. But the way that I would approach that is if price, for example, broke below some of these wick rejections that we have here to the left, I would say below this area, right? Breaks below that. And then you have some of those sell opportunities that you can look at if price continues pushing down, right? But come back and tap right into this area. That would be the limitation for me when it comes to this trade, because this is a level that we marked up from higher time frames. We clearly see that price is holding on to this area of support. So until that is clearly broken, I'm not even considering continued sells here. I would just consider this little range that I have. But honestly, that would be like a high risk, high reward kind of a trade. But other than that, I wouldn't even be looking for any sort of sells if you're looking for a scalp turn into a swing. If you're only looking for a quick scalp, then it only makes sense to wait for price to break below those wick rejections and continue.
Absolutely. And as you can see in here, if we do break back into this zone over here, it does get a little tricky trading in here. So maybe you want to stay out of this for a little bit. And I think safer buys are going to be above 152.200 over here. Let's see, safe buys. 200.
Yep.
There you go. So I would kind of stay out of this range unless you get maybe like a nice retest over here. I would wait for this level right here to break if you're going to take any buys. And this can be high risk, high reward buys right over here.
And again, the limitation could be that 152, 152, 200 area.
Oh yeah, 100%. You do have a couple candles over here that you could possibly be mirroring. So you may get a clean move up, but again, understanding that limitation of your trade right back up to that 200 level.
Absolutely.
Okay, and it looks like we're flipping bullish, holding support, creating higher highs, higher lows over here, but that doesn't mean we're going to be continuing up. We could just consolidate over here and then continue down.
Right now, pretty much the market's telling you that it's kind of exhausted, just collecting orders. So let the market do its thing, wait for price to break one direction or another, and then look for your trades.
Exactly. Looking at gold over here, we have our bullish trend over here that we've been respecting, especially with February pushing us all the way up. Obviously, that's global tensions, leaving a wick to fill. And what do you know? We just filled that wick and we're right back up at 2000 again, which is pretty insane. But, you know, that was pretty expected. We've been saying that since, I think 2 weeks ago, especially with the way February closed over here. So looking at this, we're now at these previous candle body highs. Last time we were there was August of 2020, summer of 2020. So we'll see if we're going to end up breaking through there, or we're going to reject that area, continue down into one of these areas, which I'll break down in a second, to then continue to drive back up. So expect some buyers to take some profit around this area. So what I'm going to break down right now is this level of 1960. We obviously have 1950. Yeah, you got 1920. We'll mark that off as well. And I will mark off. We'll keep it as is right now. Just looking at the previous candles. So looking at the monthly over here, I just want to point this out real quick. If you take a look at this candle right here, ended up closing with no top wick. This candle passed the high, created the high, and then ended up rejecting and closing bearish. Came all the way back down here, right? Now, if you look at the weekly of gold over here, you have this candle right over here. This candle did the same exact thing. Push all the way up. Could we end up taking profit at 2000, flipping bearish and coming down into one of these levels over here before driving back up? See how bullish this whole move is? You think that may be a little overextended, right? Price
very high chance of it.
Yeah, we were I mean, not we, but banks, institutions, big players in this game were targeting 2000. Now that we're at 2000, I would expect some kind of a profit taking and a rejection of that area before we continue through it.
At least into 1920 area, because one thing, well, 1900 in general, we have been talking about how that is an area of liquidity, right into these areas. So what I see happening here is pretty much market consolidating, breaking out of this entire consolidation with no sense of retest whatsoever. right? We blasted through that 1900 area of liquidity right here. This is the only weekly candle that kind of closed with almost like a doji, bullish doji, still showing that bullish momentum. And then last week, we started off with no bottom wick and we ended with no top wick. That just tells you that there was a ton of bullish volume. So definitely, I agree that there's going to be some sort of retest and pullback, or rejection here, and then pull back into 1900 area minimum. And then obviously with continued tensions, we are going to see that 2000 area being tapped into again. But that's an opportunity that we can end up taking. But we did end up taking like small bits of this move here anyways. I think you called it out on your Instagram too.
Yeah, no, and also with that being said, we also have fundamentals behind us. And just think about this: with everything going on right now, you're selling gold if you're going to be doing that. So first, you want to make sure certain levels are breaking, which I'll break down right now.
And
So
those
here we
corrections
go.
could happen in Asian sessions and pre-London sessions, as we have been seeing the past couple of weeks.
Oh yeah, it's been happening a ton.
Mhm.
So looking at gold over here, you get that perfect rejection so far of on the daily of 2000 right now. So far the daily candle is bearish. Are we going to completely reject? Are we going to maybe reject, come down here, retest 2000 again, form a double top, and then continue down? Right. But where could price be coming back into so far? We do have this wick right over here. And if you look to the left, you have it's 1975. You got previous resistance right over here. You also have 1960 over here, previous candle body highs over here, and then you got 1950, which is a previous resistance. So as you could see, just this move alone. Remember this consolidation over here? We ended up pushing above that consolidation and creating this high, then coming right back down to retest it over here. So now after that retest, we held support. Look how overextended this move is. So what are the chances, just like we did right over here, that we come right back down into like 1950 area to maybe hold support and then continue up, or maybe we come back down to 1920, but we'll see, right?
Yeah,
Looking
on
at
Friday, what we ended up doing was we essentially scalped that quick bottom wick rejection on that daily candle, because I remember looking at the daily time frame, and then we are talking about how this is the perfect setup. Yeah, so we scalped that quick little bottom wick rejection, and then as soon as we called it a session, we saw price pushing up, because this was a perfect, if you're looking for a longer term buy.
Oh, absolutely. So you guys caught this all on Friday?
No, remember we were on the live session together, and
Oh,
we're
yes, that's right. I completely forgot.
yeah,
We did
we
Friday
got
this
like a
week.
quick 30 pip scalp with that bottom wick, and then we were talking about how on the daily time frame
That's
this is
right.
the perfect setup for a buy. So that's
Forgot
an
about that.
example of knowing the limitations of your trade, because we didn't target 1920. We just target that 30 pips and then we're done, and then let price pretty much ride it out. And if you want to be part of that, then you could, because we're talking about how to be a part of it.
Exactly. 100%. So looking at the 4 hour now we're sitting in that range, right? Tapping into 2000. We keep rejecting it, rejected it this morning over here. We came back up to retest it again, and now we're rejecting it again so far, right? Unless we're just creating a bottom wick to continue up, but I don't really think so. So I would wait so far in these higher time frames. I'd wait for 1975 over here to probably break, retest, and continue down. But let's see if we have, cleaner levels over here that we know that we should be breaking before we take any kind of sell.
This is the type of setup that if on the 4 hour price is consolidating, just stay out of it. Like I wouldn't even look for a scalp here, to be honest with you, in Asian session or even in London. Like just wait for price to break out, close in one direction or another, at least on the hourly, and then look for your trade.
Yeah, I was gonna say this level right over here,
Mm-hmm.
1975. We'll look at the 1 hour again, but wait for this whole area. You see all these wicks over here. Wait for that to break, because you do have clean moves over here that you could be taking to the left. So this could be a valid sell over here for you to continue down. But look, last time we were in this area, how many times did we reject this area over here and continue right back up today, right, to retest 2000? So now it looks like we got like a triple top over here, or head and shoulders to then continue right back down. So we'll see what we end up getting once we get back down to this level. Looking at the 4 hour, or looking at the 30-minute, like Sharma just said, 4 hours just kind of consolidating over here. So you're kind of just like playing this range. I would, like she said, I would wait for that break and retest of this level before you take any kind of sells. And I'd wait for like a break above like 2002 or 2003 for price to continue right back above.
Mhm.
So with that being said, guys, I think you guys should have a great week. If you have any questions at all, if you need help, just let us know, and we'll get back to you. And
100%.
Wednesday we'll be live with you guys, right?
Yes. So Wednesday we have Jolt's job opening coming out right when the market opens up. Oh no, actually not when the market opens up. I think it's like an hour after New York Stock Exchange, but pretty much at that point, we're just going to be treating technical and if there's any sort of macro fundamentals coming out. But we will be doing a live session on Wednesday for sure. And then if there's any other session that we decide to trade, then we'll go ahead and let you guys know any other day.
Absolutely.
All right. You guys know where to contact us. For me, it's going to be on Instagram at Sharmafx. For Stefano, same thing, Instagram at Stefanosfx28. If you guys have any questions whatsoever, feel free to reach out.